All right, folks, welcome to the Short Vol Show Live. And in this edition of the show, we will discuss what's happening in the market right this moment, which is it is going way down. Discuss the disaster that our UVXY position has become pretty much overnight. And we're going to discuss what to do from here, what we did wrong, and some other thoughts. Once again, I'm going to be sharing my P&L with you for this specific account moving forward to just give you a fuller picture of what's going on. And once again, it's not to say that I have that much money or that little money or whatever, but it's just to give you a better track of what's going on. And in this case, my position can lose money so that hopefully you can learn some lessons so yours doesn't. All right, so today we have the markets really unraveling. E-minis down 83 right now, and let's see, the Dow down 700, a really kind of extreme down day. And UVXY, we came in short about 300 and something deltas. And if you look on the top of the screen, you can see the P&L for this particular account, which I'm going to be using for purposes of YouTube for the moment. And you can see the P&L up in the left corner there showing, I think, $3,500, and P&L for the day down $2,000. So big hit. And I've made some moves today a little bit. And let's talk about what happened, what went wrong. You're not going to see traders usually show you when stuff goes wrong because they want to always show you, how great they are, and they're trying to promote their service or whatever. But that's why this is a unique channel. So check it out. So we came in short, and part of that was because we're in a spike. Usually spikes don't last more than a day or two, but if we look at the chart here, if I pull up the VIX, you're going to see the spike extended from yesterday into today and actually continued to move higher. Let me get out of the way here for a second. So we see the VIX, here's the spike. Look at that big move up, and you can see if we just go to like a 5-day here, you can see, okay, so Friday we got this move up, right? And Thursday Wednesday was like a mini spike. Thursday we get continuation up. Friday it kind of stays sort of in the same area. It looks like it's kind of going to fade, and this is where we put the position on. Maybe we put it on Thursday as well, but in this area we put the position on shorting. And sure enough, Sunday night came in and the futures were down. E-minis were down like 30 or something. NASDAQ futures were down 100. And stuff has continued to unravel as the days progressed, and the VIX has continued to spike upward now to 23. Okay, so this is a perfect example of a position where, we took too big of a, we backed up the truck too much at the initial price. A better thing to have done would have been to put on a little bit of a position here, but leave ourselves bullets so that if it goes higher, we can continue to put this on at better and better prices. Instead, we put the whole trade on here, and there's nowhere to go. If it goes higher, you just have to kind of hang out, hold on here. And I had a viewer, contact me and say, why are you picking the strikes that I picked? Let's move to UVXY now. The strikes that I picked in UVXY were the 27, 20, and 24 strike, which are way down here on the chart. That's kind of where we were a week ago. But look, we've moved way, way up above it. In fact, now the 24 strike is $11 out of the money, and this continues to be pushing higher. So way, way away from the strike. It's way going against. A guy was asking me, well, what about selling the 30-34 call spread? And that would have been a huge loser today also because we've blown up to the 34 strike. Now, the smart thing that we did with this position was to put it on out in time a ways, right? So the strikes we picked were aggressive, didn't work out well so far at all, but we picked out to September, which is it was 50 days when we put the position on. Now it's 46 days. So there's time for things to turn around for us, which is good news. Now, what have I done so far today? Well, I wanted to do something. I'm a very like sort of proactive trader, and I tend to sort of overtrade at times, but I wanted to do something to help the position here without locking in too much loss. You don't want to give up your chances of making money back or making money, but at the same time, you want to kind of better your position based on the current situation. So my idea for this position, once again, we started out short the September 27-24 put spread. And my idea in this situation was, all right, let's be proactive and do something. Let's buy ourselves more time. So let's move our position from September out to October. So essentially, to do that, to move it out, which is basically giving us almost double the amount of time. And time, as we know, the more time that goes by with something like UVXY, the better off you are to be shorted, because it gives time for things to come back out of the spike, whatnot. So essentially, I was long 39 put spreads. Essentially, I had to sacrifice a few of those put spreads to roll this out to October. So I did essentially roll the position out to October, and I have trades here. I'll show you the trades to do that. So I basically sold a few of the spreads, the September 27-24 spreads, to raise a little capital, and then use that capital to roll. I just put this trade on as a roll, buying the October 27-24 spread and selling the September spread. So that, in a sense, doing that is locking in a little bit of a loss because your deltas are not going to be as big out to September. So, for example, we did start short like 350 deltas, but once we roll that out to another month, we become short only like 200 deltas. Now it's showing short 194 deltas. So we give up a little edge. Another way of looking at that is if the 40 times spread in September, if it worked fully, those spreads would be total worth $12,000. Now, sacrificing about 10 of those spreads, the overall best possible scenario is the spread's worth $9,000. So we've given up a little bit of potential to make money, but at the same time, we've bought ourselves another couple months of time. And I feel much more comfortable having 75 days for volatility to settle down than just that 46 days. So, and when you're in a situation like this, you have your only choices are to just give up and just close out your position, take it off completely, or to to believe in the process, to believe in the fact that volatility does come in, that we are in a spike, and that the spike will be over at some point. Right now, the VIX almost 23, up 5 points. UVXY up 5 points. So it would be, in my mind, it would be really a bad thing to just give up at the top, give up when we're in the middle of a spike here. Best to, I've got 75 days, best to wait it out a little bit and see what happens. There other things can happen, of course, but best to give it a little time here to work for us. So that's the situation right now. Like I said, I'm not proud of losing money on this. I'd rather be showing you making money. However, this is what happens to traders at times. And you can see that when you lose money, you'll see it happen to you, and it's not. It's it's a tough feeling. I've had losses in my career certainly, and I had one big period where like I had huge losses, and it almost made me go crazy because I was thinking, oh, if I just taken. I had a situation in 2000 where it was like one of the most extreme situations where if I had just closed up shop in April, at the end of March of 2000, I could have just, if I just shut everything down, I could have, and just closed my positions out and sat upstairs for the rest of the year, I would have taken home about $700,000 in cash. I was up that much money after just 3 months of trading. But I thought to myself, wow, if I can make that much in 3 months, imagine how much I can make in a year. And I pushed it, and I kept trading, and I ended up giving a lot of it back. So, losing money is not a fun thing. It's agonizing. We all value money to a big extent, and so it's agonizing. It can be good on certain times to just turn off that P&L so you're not staring it in the face. It's very hard to stay the course when stuff goes against you, but stuff goes against every trader, and that's just the way it is. I feel good about the trading today in that, I feel like I made my situation better for me. I didn't give up the chance of this trade being profitable in the long run, but at the same time, I didn't just be so stubborn that I did nothing and just let life run me over. So that's where we are right now. Market, right now, E-mini's down 77. So that represents over 2.5%. And it doesn't look that great if you look at it. Let me get out of the way here. My sort of long-term holdings on Friday, I just went to cash because I was it didn't look so great, so I figured I'd just go to cash. So that kind of worked out. I did purchase some ACB. I don't know if you follow Rich TV, but Rich TV was good at covering the fact that Afria had very good earnings. Afria, the MJ stock, had very good earnings and was profitable, and so the stock was up $2. I think it was after the close Friday. Let's pull up Afria for a second. After the close Thursday, and that kind of gave a sort of a shot in the arm to the MJ industry a little bit. And you can see that big up move from $5 up to almost over $7 for Afria. Now, I'm not a fan of Afria anymore, just due to the shady nature of those reports that came out with the short selling stuff. So I won't trade that anymore. But I do like ACB. I think it's got a lot going for it, and I think it will be in play at some point to be taken over by somebody. So I did purchase some ACB. Around right now it's trading 616. I did purchase some of that on Friday, and I did add to that a little bit today. But beyond that, I just have this UVXY position, which is not doing great. But like I said, we're gonna watch this together, and we'll see if we can't kind of have things come back a little bit for us here. But sometimes we just have to be patient and stuff goes against. And I still believe in the fact that this is a spike and it will recede at some point in the future, and things will come back to earth, and the P&L will come back for this particular position. It's still, there's a question in my mind: should I have just left my position being in SEP? I've given up a certain amount of potential here to roll out to Nove, but I feel after going through that Volmageddon and all that stuff, I feel having double the time is definitely a beneficial thing here. So if we look, let's just go back in time in the VIX for a little bit here, just to go over like what happened last year and stuff, because we did have a volatile period. So this is the last year in the VIX. You can see that first part there is the Volmageddon. Let me see if I can kind of widen this out a little bit here for us. So you can see that first big spike there is the Volmageddon, quote unquote Volmageddon, at the end of 2018. But then you see this boom, this spike in May, well, bouncing around in March there, you see it bouncing around. It's in the, averaging around like 16 or something. Then this bigger spike in May, and this spike is, it's beating that one in May right now. So we could conceivably look at this period before the Vomageddon here. We're bouncing around between like 26 and 14. We could go back into a choppy section like that for a little while. And thus, for me, when I see this spike continue, it makes me want to move my position out in time. So that's what happened there. But certainly would have been much better with this particular account to not have scaled so much at one price. It would have been better. And, if you look back, it wasn't all at one price, but it would have been better to put a little bit of a position on and then see how things go, because now up here, we're already fully committed and there's nothing else we can do. It would be great if we could take advantage now and put more of a position on or, roll, have different strikes. I mean, if we had more buying power in the account now, then we could go ahead, right? Let's pull up UVXY. We could go ahead and go into OC or even SEP and do something like, instead of the 27 strike, go up. Now that we're up at 35, go to the 31 strike or the 32 strike. Buy the 32 27 spread, right? That can be had. Now you could have put on that same idea of doubling your money. Now you could be putting a similar trade on to quote-unquote double your money, and all you would need is UVXY to go to 27 instead of it having to go to 24. So, but we've given up that opportunity by using all of our bullets at once. So, it could have been different. 32 could have been the top in UVXY, and the market could have rallied today, and things would have gone back down, and the position would have done better. But in all instances, it's still an error to put so much on at one price, and that was a mistake. So there you have it. You want to scale into these things, because if you put everything on at one price, your hands are tied. Like my hands are tied now. I can roll stuff around or move it around, or I could move up a few strikes, but everything's going to cost me edge, and everything's going to lock in part of the loss that has been gotten by this position in the last couple of days. So there you have it. That's an example of what seems to be like an obvious thing. Oh, well, we're just going to sell into a spike, going completely against. Now, the good news, of course, if we look at this, the good news is we didn't sell some sort of naked calls, or like a bunch of naked calls and be forced to cover. If we had sold that alternative we were talking about the other day of selling the SEP, like 24 calls, now those would not have, we wouldn't have been forced to cover on them, but we're still, our hands are tied, and it becomes more and more capital intensive the higher this thing goes. So now, but I would definitely say still now, there's an opportunity, because we are in the middle of a spike. There's an opportunity to short it up here. If you haven't, used a bunch of buying power lower in the spike, you could, you could sell some calls or buy some put spreads now. This is definitely a spike, and UVXY, mark my words, it always does, will go lower from here. It's just a question of how to position yourself and how long it's going to take to do that. And that is the unknown. But once again, covering and covering the worst thing that would drive me the craziest of all is to cover the position here and then have some positive tweet today. This thing goes back to 28 tomorrow, and I'm just left with way less money. So there you have it. We're in a spike. The news, I haven't even talked about the news that's making the market move, because, it doesn't really matter. Stuff happens. We sort of correct. If we look at the E-minis, and we back the chart out to a year, we're still in an uptrend. this is just, it's just pulling back. And you can see that the Volmageddon thing was a way bigger down move. And who knows, maybe this is the start of something bigger. But I'm happy that I am not in a situation like I was way back in the Volmageddon, where I was selling a bunch of naked calls, where, like, it's one thing to say, well, I'm going to make a decision to cover part of my position. It's another thing saying, the clearing firm coming to you and saying, we're forcing you to cover your position, cover it right now. And I've had that kind of thing happen to me before. So that is the beauty of using a spread here as opposed to naked calls, is nobody's going to tap me on the shoulder and say, you're forced to cover, because the risk is what you pay for the spread. So there you have it. We will see if we get a some sort of recovery in the market here coming up. We want to stay calm. We don't want to get really emotional and start getting panicked and all this stuff like that. You can see that I'm relatively calm here. This stuff happens. It's the way it is. There's not a whole lot you can do about it. That chart is not pretty for the E-minis. And I kind of knew when I checked the futures last night. I didn't get a chance to check the futures till about 10 at night. I kind of knew that it wasn't good news for the position here. But once again, things can turn around. This was, let's see how many down days. It's like 1, 2. This is 3 down days in the market. Market won't go down forever, and things will come back. So there you have it. Once again, I'm losing money, so you don't have to. So let's take a look here. Let's take a look at the comments for a second. And I see some people have similar sentiments to me. Hello, IFI group. Hello, Man Accounts. What's up, Al? How you folks doing? Great to see you on board here. Let's see what time we have. So it's 1:23. We'll see. I think if this gets having Trump as a president is sort of a two-edged sword. But I think if this gets the attention of the administration enough, then they will attempt to do something to stem it. Now, how much power the president, any single president, how much power they have to change things is certainly debatable. Time, we have to look at this as sort of a long-term thing. And a lot of times when I get sort of panicked, what I do is I back out my charts and I look at things from I try to look at things from like farther up above, as opposed to being right there in like the minute chart and being like, oh, come on, E-mini up another point, come on, you can do it, up another point. I try to look at things from sort of farther back. And yes, this position is a small position here that I'm using for the YouTube channel. And other people, there's a lot of bigger traders out there that have bigger positions on, but the principles are still the same. Now, executing on a larger scale can be more difficult, and you might use different instruments, but the principles are still the same. Yes, Man Accounts. I can't jump at the. I can't get involved with politics because it's just I have to remain neutral on these things publicly. So, although I'm sure Al kind of knows my private personal feelings because I've shared it with him before. But anyways, the market is independent of as much as the president would like to be able to control the market. Nobody can control the market. So we just have to see what happens moving forward. It's a unique situation, but if we look, a lot of stocks are just kind of shaking it off and totally unaffected. It's not like the economy is like in shambles. It's like many of these companies are just like, whatever, I'm down $1, down 11 cents or something. They're like, whatever, moving on. So that shows us that the market is big, and that is and that this is something that's happening today, but it could likely not be happening tomorrow. And there was a time when 691 points in the Dow was like unbelievable, unheard of, and the end of the world. But now with the Dow up, at the high lofty prices it is, percentage-wise, it's not as big of a deal. And when we had that Volmageddon, we had these moves every day for weeks, it seemed like. But we have been rallying for a while, and stuff pulls back after big rallies a lot of times, and that's what we have right this time. All right, so best of luck to everybody, and we'll see what happens to the position. I wanted to give you to share this with you because I said I would share the P&L, and we will track it moving forward and see what happens from here. So just to sum it up, rolled the SEP SEP long put spread out to October, and took losses as we spiked with UVXY up 5. Go figure. I have no position for months in UVXY, and then I put a short on it and it's up 5. That's just the way of the world sometimes. All right, folks. Thanks for watching, and we will see you in the next one on the Short File Show Live.